The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the January 8th, terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes. Hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything humanly possible to have an extraordinary day. And let's always remember what's talked about, well, that's just simply a dream. What's envisioned, though, that gets darn right exciting. Of course, what's planned becomes possible, but what's scheduled, that is real. And I want to thank you for scheduling your time with me here this morning. I am grateful for your presence, and I am here to serve you. So go ahead, pick up that phone, give me a call at 877-927-6648. Would be honored to take your call. Together, you and I, we can go hunting for bulls and bears. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has that exact same question. So don't call in for me. Don't call in for yourself. Call in for someone else. A human random act of kindness. That's what it's all about. This is Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. And the show we've got for you. You got the Dow up 235 points. He's trading out at 17,820. Just a few points within where it opened up on Monday. The S&P, the same thing. She's trading out at 2,051, up 26 points. Composite is up 60 points. She's traded at 4710. Russell 2,000 up 14. Traded at 1190. DAX up 200 points. FTSE up 135. Gold's up $3. Silver's up 5 pennies. Light sweet crude is up 32 cents. Leading the charge to the upside is Chipotle. You talk about being on fire. Chipotle moving higher the last couple of days with conviction. She's trading up at 720. That's up $26 and change. Valiant Pharmaceuticals up $8. That's up 5%. Global Payments, that's up 7%, up $6. Constellation Brands, STZ, that thing is on fire, up $4.85. Baidu's up $5. Lockheed Martin up $4. Sherwin-Williams up about $4. PPG Industries up about $4. To the downside, it's Priceline, but Priceline is moving into a swing point, a hammer candle, doing it with, I think, lighter volume, if I'm not mistaken. Biogen, now that's kind of interesting. I think pre-market, that thing was up about 6%, now back about 2%, so we'll take a look at that. Signet Jewelers is off $6, down 4%. You got Pod, Insulet Corp, PODD is the ticker symbol, down 10%, off 460. Apollo Education Group down 14%. Kate Spade off about 6%, down $1.83. Again, our call number 877-927-6648. Let's begin. Let's kick things off. Let's go take a look at the markets out here. Let's do this. Let me see. Can we do this? Let's go put up the S&P 500. Well, I don't know what I've got on here. I probably should have done this earlier. That's a daily chart. Do I want to do it this way? Give me a moment to let it populate out here. Yeah, we'll go ahead and we'll let it populate this way. So if we take a look at the S&P 500, if you're watching this on Tiger TV, what I've got up on my screen here right now is the S&P 500, along with its horizontal trading range boundary lines out here. These are now you're looking, if you're watching this on Tiger TV, the blue lines, those represent daily. The green lines represent weekly. Now let me do this here for you. Let me switch this to a weekly time frame. Let me edit the chart out here. So let me do this. Let me come. I'm going to turn my daily off. Makes it just a little bit easier for you to take a look at out here. Okay, so here's what we know as we take a look. And that's the weekly chart. Now, on this weekly chart out here, what you're going to notice, all of these horizontal lines going across my screen, these are the horizontal levels of where price typically travels within. And we're using the body of the candle. So the body of a candle is truly the essence of price. The extreme emotion is nothing more than the wick, the upper and lower shadows out here. But they do provide us with information. If we take a look at those arrows on my chart out here, those arrows on my chart happen to identify the October lows that are formed out here. Every October, we see a low in the marketplace. I know everybody talks about the scary October of 1987 crash as if it's going to happen every year. Well, to a certain extent, it's not a crash, but we see a nice significant bottom that forms in October. So that certainly is something to think about, and that certainly was the major bottom that was formed here this past October. Okay, let me get my cursor back because it's really hard to do this. Visible without a cursor. Okay, so now what do we know as we take a look at the weekly chart for the S&P 500? Well, on a weekly basis, the S&P 500 price came back and it tested a level of horizontal support, a level that it broke out of. It broke out of the week that began November 3rd, came back and tested it the week that began December 8th, tested it the following week in December 15th, came back and tested it again as we speak right now, and that is a level of support. So inside the S&P 500, if during the next couple of weeks you see a pullback in about the 2006 level, fire away, because that will be your significant bottom out there. Your stop would be any close below. Any close below, I would have to say, the trading session from December 15th. If you want to know what that low is, let me put that up on the screen this way. That low would be 1972 out here. But this is a very strong level of support. Now, if this was the significant bottom, which I don't believe that it is, at least a significant bottom that becomes the catapult that leads to much higher prices. All we're doing right now inside the S&P 500, we're trading where it opened at 2054, and you are trading at 2054 as we speak right now. So we've basically done nothing since the open on Monday. Hey, a lot of hubbubaloo, yeah, out there, but really not a whole lot when you take a look at the advance in points out here. Needless to say, if you do see a move above the high of last week, which is at 2093, you're likely to get a move up into the 2,118 level. That is on the weekly chart for the S&P 500. Let's go take a look at the Dow out here, see what the Dow has done. As we take a look at the Dow, we're going to see really the exact same thing to a certain extent, in that we are trading right where we opened. It opened at 17,821. You're trading at 17,832 right now. So it's got 10 points higher. Now, inside of the Dow, significant resistance at the top of its horizontal trading range line at the 18,118-ish level. Our actual high has been 18,103. So that is significant resistance. Any move above that, and what that's going to do from a weekly perspective, that says you're going to set up a move into the 18,740-ish level as its next move out there. That says that, hey, if between now and the next couple of weeks you see a move down in the 17,492-ish range, that would be your message to go ahead and go long the Dow out here. So that's what's going on inside of those two charts. Let's go take a look at the ETF structures. As we speak right now, let's switch it over to the ETFs. Let's go take a look at the Dow Diamonds on a daily basis, up $2.55 with 1.6 million shares. So you got a nice little gap up this morning. If we take a look at where this thing is at from a retracement standpoint, from high to a low out here, what you're going to see is you are up above the 0.618 retracement level. This says here, give me a moment here to get this off of my screen. Give me a moment here. There we go. Okay. If we take a look at the Dow Diamond, says, hey, no reason for this to not actually try to go tag the 178.91 level. You've got wide price spread today. So far, volume only about 1.6 million shares, but that's not too shabby, with the exception that you did 10 million shares to the downside back here on January the 6th. But we've been trading for 45 minutes, so let's round that up to about 1.73, so about 7 million shares or so is probably what ought to trade today. Yesterday you did about 5.5 million shares. So you've got some accelerating volume out here. Next move inside the Dow Diamonds, if it can move really any more at all today, would be about the 178.91 level. That could be the C point of an A to B equals CD to the downside out here. That is a possibility. We'll see how the day plays out. Inside of the SPY out here, that's up $2.86 with 30 million shares already behind its move. Now, this made a move lower back on January 6th with 206 million shares. But 30 million shares to the upside, that's pretty good volume. That's the kind of volume that it made to the downside out here. I don't know what the actual high in the SPY is. I didn't get a chance to call over and tell them to get rid of whatever that bad spike is inside of the SPYs on December 18th. So what we'll do is we'll just simply use the high out here. I know it's just a tad higher. I think it's, but I'm just going to use the high off here from December 29th. Well, I'm going to try to use that. We'll use that as our gauge from a retracement level to see where we're at. So inside the SPY, she's just sitting at the 0.618 level right now, 205.11. So this would be a pretty good resting place for the rest of the day. We've had our fireworks Monday, Tuesday, and then Wednesday and Thursday. And we're basically back to a scratch inside of the markets out here. If we go take a look at the QQQ ETF out here, the Qs right now, just getting back above the swing point out here from December 16th. It needs to stay above 102.47. If it closes back below 102.47 today, that would be that would say that's a pretty decent level of resistance. And from the standpoint this way, not so much resistance. It's when you just simply close inside a swing point, you can't get out of it. Then what it says is you could go back and test the bottom. So the real key level so far, if we take a look, as we take a look at the diamonds and the SPYs, really becomes the Qs. And can the Qs hold the 102.47 line? If we take a look at its most recent retracement from a high to low out here, we're going to find is it's got just a tad more to go in order to get up to the 0.618 retracement level. That's at 103.11. So you're trading out at 102.85. No reason for it to not go spike that. But the key level to watch inside the QQQ ETF is going to be that 102.47 volume. 8.5 million shares. That's a pretty decent volume for 47 minutes of trading. Made a low on January 6th with 66 million shares. So, yesterday was a light volume day, 37 million shares, but today it's looks like it's going to do well. I don't know how it's all going to play out over the next several hours out here, but at the open, at the moment right now, it's got some volume behind its move. As we take a look at the IWM, the Russell 2000, she's trading up $1.66 at 118.40 out here. Volume behind its move so far this morning, about 8 million shares, 7.7 to be exact. Made a low out here back on January 6th with 67 million shares. Nonetheless, this is pretty decent volume, too, on the way up if we were to go ahead and keep its pace. If we look at the retracement level, retracements from its high out here on December 31st down to the low that came in on January 6th. You can see the 0.618 retracement level is out at 118.72. Pretty good chance that it's going to head to the 118.72 level out here inside of the IWM. Let's take a look at a couple of sectors inside of the S&P 500. Get a feel for what might be going on out there. Let's take a look at the number one weighting structure, which is the XLK. Let's see what kind of juice we've got behind it. So far today, 2 million shares trading into the trading system January 5th that has 7 million shares. So it's got some pretty decent volume. Yes, yesterday was light volume, 6.5, but you've already done 2 in only 49 minutes of trading. This is garnering some strength here on the way up. If we take a look at retracements from high to low, it is just above the 0.382 retracement. It says the XLK ought to try to make a run for 41.46. That's another 30 cents higher or so, right around there. Right now, the Dow's up 250, S&P up 28, composite up 68 points. This is Steve Rhodes. This is TFNN. We'll be right back. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 245. S&P is up 27. What's kind of interesting about the Dow being up 245 points as we speak right now is if I switch over here to the summation index for the Dow itself, it's still not been able to peek its head above the zero line. So if you're watching this on Tiger TV, I'm asking you to take a look at the bottom portion of my chart out here, and this horizontal green line going across my chart out here. If in fact at the end of the trading session today, that I was able to get above the zero line, says that the trend has changed out here. So yeah, so even with yesterday's move, what was it, like about 188 points, today's 245-point move, the summation index has still not gotten into a positive territory, unless my chart is frozen here, and I don't think it's frozen. We're trading at 17,830, right? Let me switch back over there. 17,830, yeah, we are. We're trading right there. So it actually says that this has come right back up to the line here inside of the Dow, Dow, where if the sellers actually have control, they would be licking their chops. So we'll see how that plays out here. And it's not gotten into, and it's only 30 stocks, obviously, but it still has not been able to get into a change in trend positive territory. Now, we know about the Dow, the S&P, the composite. We're all trading right around where we were on Monday out here as well. So it'll be key. Now, if we go take a look at what's going inside of the Dow, you got everything is mean and green out here. We take a look at the largest percentage change in the Dow. You've got United Health. UNH is the ticker symbol. So that's up 3%. It's up $3. This is a daily chart that we're looking at. So let's go take a look and see what this is trying to do out here. It's trading into its swing point from December 23rd. That has 3 million shares. You're up nicely this morning with 1.2 million shares. So it's got the volume. You're trading inside that swing point. That says 103.93. Should be tested. 104 is the TAS market profile resistance level. So that'll be a key area. If it can break above that 103.93, do with more than 3 million shares, that sets up an A to B equals CD to the upside. That is on United Health. Second up, percentage-wise, is Microsoft. MSFT is a ticker symbol. She's trading up $1.22, up about 2.6% out here. So Microsoft completed a 1 to 1.272 A to B equals CD, then gapped up on the next trading session. So let's go ahead and get rid of that pattern out here. That pattern is gone and completed. It looks like Microsoft volume today is 6 million shares to the upside. It's cleared the swing from January 6th at 36 million shares, so roughly the same kind of volume to the upside that it had to the downside out here. You would expect the swing point has 23 million. You would expect that Microsoft's going to try to make a run for the December 23rd swing point, at least a low of it, 48.13 out there. MSFT is the ticker symbol. You've got Cisco. Let's go take a look at Cisco. CSCO up 2.5%, up 67 cents. Let's go see what it is doing on a daily chart out here. You've got Cisco trying to, let's see here, down. Yeah, so it had the downdraft on January 6th, that swing low, 47 million shares. Today you're up at 5 million shares. So lighter volume on the bounce inside of Cisco. Nonetheless, it's above resistance of its profile. No reason for this to not try to get up into the swing now from December 29th, at least a low of it at 28.32. Let's see what's not acting well percentage-wise inside of the Dow. That would be McDonald's and AT&T. McDonald's is up just 0.25% out here. So let's go see what it is doing. MCD is the ticker symbol. As we take a look at McDonald's, she's trading into a swing. That's the swing from December 29th. That's got 4 million shares. It's done 935,000 shares in an hour of trading. So 900,000 times 6, we'll call it 54, 5.4 million shares. If the volume were to keep up, it's moving into that swing point. Even this is the weakest percentage-wise inside of the Dow. So, and it's trading inside that. Well, it's if it closes inside 94.27 or 94.21, it's rejected that swing point. But nonetheless, it's pushing into it with volume. So even if it closes back below 94.27, it says it should at least take another run for the swing point. But if it closes above 94.27 and says, hey, it probably goes and tests the 95.46 level. That's the high of that swing point, and that's on the weak link inside of the Dow. If we take a look at AT&T, T being the ticker symbol out here, struggling yesterday, moving lower with 31 million shares so far today, 4 million shares to the upside. So this is a bounce on lighter volume. This says to me that AT&T's work to the downside may not be over. However, let's go see what it did. Where is the swing point here? It's actually all the way down here from December the 15th. 30 million shares to the downside, was moving with 31 million. Yeah, it looks to me like AT&T is going to go ahead and make a run for that December 15th. At some point, it's going to go ahead and make a run for that December 15th area, somewhere between 32.07 to 32.44. Right now, the Dow's up 248, S&P up 27. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 246 points. S&P is up 27. If you were going to ask me, okay, so what's my take? My take is, number one, we're right now trading at the area where we began the week, give or take a few points out there. So, if you had slept, if you went to sleep early Monday morning and you woke up just now, you would say, hey, market is exactly where it was when I went to sleep on, just as the market was opening on Monday out there. What does that mean? Now, to me, what it means, the meaning behind all this is that we're going to see a market that's going to continue to gyrate, going to continue to drift sideways to lower, most likely lower, over the course of the next week or two out here before it actually puts in that nice bottom. Now, I'm not saying that it couldn't have occurred this week, But if you're asking me my opinion, that's what I believe that is going to take place. So that says that the market probably begins to start trading sideways. You got some nice wide-ranging bars, some nice up movement today. Markets don't end on wide-ranging bars, either the upside or the downside. You go back, take a look at most markets. It's very difficult to reverse after that kind of a day. What you start to see happening is you start to see small-bodied candles. That's what communicates the message to us that the market starts to get tired out there. If that's what we see, then the expectation ought to be that the market ought to go ahead and pull back over the course of maybe the next couple of weeks out here. So we'll see, how that plays out. Of course, it's interesting when we took a look at that Dow chart with regard to its summation index that it hasn't been able to get above zero, and really in the composite it's just slightly above that level. So we'll see how all of that ends the trading session. In the meantime, let's go peek around and take a look at some of the normal things that we look at currency-wise. Let's look at the Great British Pound. We didn't take a look at that during the first hour. This is the daily chart. What we know about the Great British Pound is it is now at that level of a 1 to 1.272. A to B equals CD to the downside. That price point is 1.507. You're trading at 1.508. So we're there. Now we're there. We don't have a bullish reversal signal, although the Great British Pound could, in fact, form a hammer candle today, but it has not as of yet. If it did, that would be the first sign that maybe the pound is now the pound is certainly in an oversold condition, so beginning to move sideways would be more bearish and bullish out here. Starting to reverse out of this area, giving us some reversal signals, would say, okay, the move to the downside for the time being is over. If in fact this continues to move lower, and if this moves lower, it'll put energy inside the U.S. dollar index. Then that says 1.468 is the level where price moves down to. That's on the Great British Pound out there. Let me just send a quick message here to the control room. Is there a problem with voice in the den? It's going to be a moment here, folks. Letting the control room know. Oh, there we go. Oh, great. Okay, they're working on it now. I'll just send a message out to folks, and I'll get back. Okay, back to the market. Okay, so let me go back. I know that those listening on the radio or Tiger TV, you can hear me just fine out there. So that's I think you can. So that's good. Yeah. Okay. So now let's go take. So on the Great British Pound. Let me know when we're back, Al, if you can, inside the den. Okay. Okay, you're boy. That's gotta learn how to type. They're never left. Okay, so as we take the Great British Pound, what I was saying here, just for those of you inside the den out there, Great British Pound has made the 1 to 1.272. A to B equals CD down. If we see a bullish reversal signal out here, that and a confirmation with a move higher the following day, then we can say, okay, we're in for at least a decent bounce out here, if not a bottom. It is in very oversold condition, so moving sideways is very bearish. That's what's going on inside the pound. If the pound continues to move lower, the U.S. dollar, that'll aid in the U.S. dollar index moving higher out here. If we take a look at the Japanese yen against the U.S. dollar has just been moving sideways out here. It is getting ready. It's coiling itself to move higher, to take on the 121.84 level, probably take that out and actually move up in form. It's 1 to 1 A to B equals CD in the 132 range. So that seems like the larger time frame where the Japanese yen is moving to. If this moves higher, that'll go ahead and put a little bit of weakness inside of the that'll put some strength inside of the U.S. dollar. If we take a look at the euro as we speak right now on its daily chart, the euro is down to the 1 to 1.618. A to B equals CD to the downside. No reason for it to not really stop there. It can easily move down to the 1.15 level. That would be the 1 to 2 A to B equals CD on the daily chart. Let's go to Steve, and I don't have the city. Sorry about that, Steve. Steve, where are you calling from?
That's right. It's Nashua, New Hampshire.
Oh, Nashua. Great. Hey, I like your first name.
There you go. Say, last night, -10 with wind chill. Right now it's 1.
Oh, my goodness. With wind chill. With wind chill.
1 degree. So what I do, I buy a large pizza, eat the whole pizza, then I turn the box inside out and put it in front of my truck radiator.
Ah, okay.
Keep the cold air from going through, heat the water up faster.
That's too funny. That's too funny. Are you a native of that area?
Yes.
Okay, so you're prepared for it.
Oh, sure. Yes. Hey, Steve, I was looking at Bob. Check me on this, would you? The 6 month. It was out almost exactly 6 months yesterday or today, and I see what looks like an ABC volume going up right into early November. 6 month weekly, if you would. That's it. And then it's been declining ever since on markedly less volume.
So you're looking for an A to B equals CD to the upside. Is that what you're saying?
That's what it looks like. Yes.
Okay. So if you look at the
volume down or less.
Yeah. So on the weekly chart, Steve, what prices pulled back into, because we don't have a lot of data, what it has done, it's pulled back into that the week of November 3rd is where it broke out with volume of 242 million shares. And you've pulled back with, as you say, remarkably lighter volume, only 49 million shares out here. What we haven't seen, so you've come back, are you already long the equity?
No, just looking at it, and it just kind of looks like an ABC.
So you got a couple of different things to look at out here that say that it should be at good support. First, you've got that wide-ranging bar from that week that began November 3rd. The second thing that you've got is December 8th, and the low of that swing point is at 101.20, and that had 92 million shares. And you've tested that this week with only 49 million shares. I can't imagine it's going to have 50 million shares come tomorrow. So you are testing a level which should be good support. The problem, I think, is that there's no well, let me see if there's a pattern out here. The only pattern, the A to B equals CD, let's take a look at this. This would be off of the high, Steve, from November 13th, and I'll have to use my B point November 19th and a C point out here November 25th. And so it has made the 1 to 1.272. If you're looking to get into a long position, you can fire away now. And what you would want to do is your stop needs to be below 99.90. Because I think if it closes below 99.90, an actual close below that, then what you could be looking for is for Alibaba to actually pull back to about 97.02. Or maybe even $90 out there, but it does. I can see all the reasons why you're looking at it as a possible trade right here.
Steve, maybe I miscommunicated. Were you using the A is like $83 from mid-October, and B obviously is mid-November? That's what I was looking at.
What I'm looking at for you is actually now that we identified on the weekly chart that it's up against good support.
Yeah.
Then what I did was I flipped over to a daily time frame to see if I could find a pattern on the way down. So has this completed a pattern on the way down? Yeah. And the pattern that it completed on the way down was actually an A to B equals CD. So, what I like to do and what I'll be teaching folks, what I taught folks on November 22nd, and we'll follow through tomorrow with the 3-hour live workshop, is to be able to buy the D point. That means the completion of an A to B equals CD. And so, in essence, you got that message perhaps on January 6th. As the market was making a low, January 6th, Alibaba was actually giving you a bullish reversal signal. So
sure, and your December 18th was your A for the ABC down, I see.
That's, actually November 3rd. November 13th is my A. So I've got that at $120 even, Steven. I think that's the all-time high for Alibaba. So that my A point is there. My B point on this is the low of November 19th. That's at 107.22. And then the C point is at 115.17. That was the 61% retracement on November 25th. So it made the 1-to-1, and it gave a reversal signal on December 9th, but it didn't really do much since then. I just think that it looks to me like there's accumulation perhaps going on down here. And if you want to be one of those people that are accumulating it seems logical to me, in what you're looking at.
Sure. Okay, great. I thank you.
Oh, my pleasure. Stay warm up there. Hey, you didn't tell me, though, who did you order your pizza from?
What's that?
You said you order a big pizza pie, you eat it, and then you put it in front of your radiator. Well, you didn't tell us who you order pizza from.
Yeah, it's called Sal's Pizza. It's a big chain up here anyway. And they have a 19-inch large.
19, hey, now, what do you put on your pizza? Do you put anchovies on your pizza?
No, just either plain or buffalo chicken.
Buffalo chicken on a pizza?
On a pizza, definitely with broccoli. It's the best. Then you dip it in blue cheese dressing.
No way.
It's like a whole meal. It's beautiful. Try it
All
out.
right.
Yes. Buffalo chicken with broccoli.
I'm gonna run that past Nico to see, because you've added broccoli, if that qualifies as an approved TFNN pizza pie.
Okay.
All right. Hey, thanks
you.
so much for calling in. You bet.
See ya.
That was Steve. Now, how about that, folks? Have you ever had pizza with buffalo chicken on it? It actually sounds kind of interesting. And then now the broccoli thing, I've got to on the pizza. I'm going to give it a shot. I'm going to at least get somebody to, I'll make a pizza, we'll give it a shot, and eventually I'll report back to you. I don't plan on eating it for a while, though. In any event, let's get back to the markets out here. Let's go see what we've got. Dow's up 262, S&P is up 30 points as we speak. We were looking at the currency pairs out there. The one that we haven't looked at is your favorite of mine, which is the euro Japanese yen. So with the market moving higher as it is, we're not seeing any kind of confirmation at all to the upside with the euro Japanese yen. We've seen no bullish reversal signals. It's not doing anything, but not doing anything is not really a good sign for the market out here. So it has not turned to the upside. This actually says that it eventually wants lower price. Now, maybe it's only down to the 140.12 level. Perhaps it's all the way down at 137.49. The currency pair itself is also in the oversold condition, but it has not broken topside, and it really should have. It should have been the leader, and it has not let out there. I have a request, it looks like, to go take a look at the VIX. So the message is, can you look at the VIX? And the answer is yes, I can, but I need more information than that. But as we do take a look at the VIX index, right now it's trading above its 50-day exponential moving average. Let me put this other chart up on my screen. Here we go. It's trading just slightly above that level. That's 1630. You're trading at 1737 as we speak right now. So the message here is really clear. For those of you that are short, and maybe because you haven't used a stop or something along those lines, what you'd really want to be looking at is if you see the VIX index close below the 50-day, that's at 1630, that bodes really well for the bulls out there. That says you've got plenty of liquidity. Now, we're not seeing the liquidity gauge inside the euro Japanese yen give you the all points bulletin to go north out here. So we haven't seen that. You also really don't have a confirmation in the VIX. What we do have inside the VIX, though, is the following, and that's the first chart that we looked at. And inside the VIX, it's got several unique patterns out here, which are really pretty cool when we take a look at it. One of those patterns is that 50 period with one standard deviation Bollinger Band, which is the top portion of my screen out here. And once the VIX typically breaks above that, it eventually works its way. When I say eventually, I guess you'd say that about everything, right? You really get to start to see when it gets really stretched. Now, it is back inside here. This bodes well potentially for the bulls out here, because once it gets back inside that Bollinger Band, it typically goes ahead and makes a move all the way down to the bottom, which is at 1251 out there. And if you do that, that's going to be quite a bit of fuel inside of the market. We'll see if, in fact, it can do that. I would say right now, just simply keep it simple, bullish and bearish. What you want to do, the all points clear bulletin, is if the VIX gets below that 50-day at 1631, you are at 1749 right now. If I take a look what the VIX is actually doing today, let me see what kind of percentage to the downside we have. We got 17% to the downside. So if, in fact, you finish at less than, not 17%, you're at 9% to the downside. That actually, so anything less than 10% actually bodes pretty well for the bulls as well out there. You start to get to a minus 10% or more, then that says, okay, you at least begin to see some type of retracement, some type of a pullback inside of the market. So that's the request, to take a look at the VIX. I've got another request here. It says, would I be kind enough to take a look at oil, light sweet crude? And I most certainly will. So as we go take a look at light sweet crude, here's what we know. We'll take a look at this on the longer-term basis out here, and that longer-term basis is the quarterly chart. And what we know is that price is now below its floor of its 0.618 retracement from the low of 33.20 to the high of 114.83. That number was $50.67. You're at 48.85. It actually says that that light sweet crude could move down to $33.20. Happy days are here again. This is Steve Rhodes, TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 252. S&P is at 28. Composites up 70. Back to the light sweet crude request. As I read the email a little bit further, they are looking to try to take some type of counter trend bounce or rally. So let me give you some parameters that you could take a look at out here. Now I'm going to put this chart up on my screen out here. This has got just a slight delay in it. You've got light sweet crude is trading at 48.76. This is going to show you the price point of 48.93 right now. That's not a big deal. So as we take a look at it, the chart patterns here that I want you to focus on. Now I've got the continuous contract up on my screen out here. But the chart patterns that I want you to focus on. Number one, if I take a look at wave counts on the way down, I've got this in 6 out of 7 waves to the downside out here. That 6th wave being yesterday. So maybe tomorrow, maybe today you just finish out around this area. Tomorrow you get one more push down, get that letter G. And then that leaves you Sunday night, Monday morning for a confirmation of that. What we also have going on is we can see that price has pushed lower with less weakness out here. And that's coming off of the trading session from December 18th. Now, we do not have any kind of bullish reversal signal out there. And here's the key thing. Markets will continue to go lower until the bulls arrive, right? Until the buyers arrive, correct? You know that to be the case. We all know that to be the case. The reality is that markets give you those messages. There are about 33 different Japanese candlesticks out there. But if you learn all those, is what you're going to do. You might as well put yourself in a straitjacket. You don't need to learn all those. You just need to know the ones that actually give you the reversal signals. That's what I began teaching to all of the folks that attended the kickoff of the 7-week trading workshop that we did. That was on November 22nd. We've got the follow-up session. That's tomorrow morning from 9 to 12. You can still join that. Both workshops are archived on your members page. All clients have had access to me by phone, by email, by Skype out there. I get back to everybody because I want to be able to teach you and want to be able to answer your questions for you. So you can come over to the homepage at TFNN.com. You can sign up for that. What you'll notice, one of the patterns that I certainly teach out there is when price moves higher or lower with either less weakness or less strength out here. And that's what we have going on right now inside of light sweet crude. Now, another thing that you can also take a look at, you don't even have to understand that. Just the simplest approach is I've got both the 8 and the 13-day exponential moving averages. Why? Because those are two numbers that are part of the Fibonacci summation sequence. You go 1, 2, 3, 5, 8, 13, 21, 55, I think, is after that. And so those are the numbers. So I use those since I'm using 0.618, 0.786, 0.382. It only makes sense to me to go ahead and use those same Fibonacci numbers as part of tools that I use. The 13 day, because we're looking at a daily chart, is priced out at about 52.68. That's really what you're looking at in order for light sweet. If you're looking for a price to close above that in light sweet crude, and you're at 50. You're basically at $50 right now. That's only about a $3 move. It could do that in a heartbeat. But if you see a close above the 13-period exponential moving average, we haven't seen light sweet crude close above that level since September 26th. So it has been a long time. And does it mean if you close above it that it's a guarantee? No. But if you've got these other patterns out here that suggest, a buyable, bounceable bottom out there, it would be worth the shot. You take a look at something like UCO. Maybe this person is trading the futures contract. I don't know. There was no indication out here. So we'll be patient. Maybe that buyable bottom comes in Sunday night. Come Monday morning out here, depending on how the day plays out. But the key number to be watching as we speak right now is probably about $52.68. Well, folks, I won't be with you tomorrow morning at 9 o'clock, but have a great weekend when you start it. Be safe, be warm, and I'll see you Monday morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.